I'm William Grantham with IchimokuWeather.com, and I've been asked to do some trade plans. So we're going to do one today with iShares U.S. Aerospace and Defense ETF, ITA. So first we drew in a line here at $111.44. That's where we closed today. So we're assuming that tomorrow we're going to be opening somewhere close to this. So we will move this line with the open of tomorrow, assuming that we put on a market order that will activate as soon as the market opens in the morning. So taking a look at 10% stop from $111.44, that would put us down at $100.30. So 10% below an open of $111.44 would be $100.30. This line, of course, will be changed based upon where we actually do open up at. Where we open up at, we'll put our stop at 10% away from that opening price. So with it at this point, we can see that we do have a nice cloud that is in between our open and our stop, and that should give us a nice buffer of support, as well as having the blue Tenkan-sen and the red Kijun-sen here as well. We also have a 10% target on the map up here at $122.58. Now you could have a 10% target or 20 or 30%, or even all three, depending on how many shares you have. You could break up your shares and have different ones going off at different percentages, depending on where you want to have your targets at, or you could just be moving up your stops as the market moves up. Looking back, we can see that we did have a high of $120.31 right before we had the COVID fall. Look at this fall. It came right all the way down and created a low here at $56. And then we've progressed from there. And back in November, it took off, having a nice Kumo breakout, came in to the first of the year with a consolidation zone, and then came up to where we are right now. But with us $120.31 top back here at the first of last year, that is going to be our resistance in between where we currently are and where we're wanting to get. Let's do a fun calculation using our average true range. If we have $111.44 and we come down with a 10% stop at $100.30 and we subtract one from the other, that comes out to $11.14. Now our average true range is $1.69. That means on average, the daily range is $1.69. So if we take $11.14 and divide it by $1.69, that comes out to 6.59, meaning that we could possibly have 6 days of average movement before our current price at $11.44 will come down and hit our stop. So that would be a $6 buffer, or a six-day buffer, or a 6-day safety range. I name it my safety range. So as long as it's above 3.5, we're good to go. And this one's all the way up at 6, which is a larger number than usual. So that gives us a pretty big safety range. And the larger your safety range is between 111, or where your open is and where your 10% stop is, that also means it could be that same amount of time or even more for being able to get up to the target. So it could take way more than 6 days to be able to get up to our target, because usually it hits your stop a lot faster than it goes up and hits your target. However, having a good safety range does keep you in the trade longer and gives the trade longer time to be able to consolidate and move up. So for the trading plan for this trade, we are going to be using a market order that will go in and activate at the first of the trading day tomorrow. So we'll put in the market order today, and tomorrow will be activated in the first few minutes of trading, and that will be our entry, and then we'll redraw the stop down below and the target, and we'll see if we can hit the target before we hit the stop. I'm William Grantham with IchimokuWeather.com, and this is a trading plan for ITA, iShares Aerospace and Defense ETF.